When using interactive brokers to buy stocks, we have the option to choose between 3 pricing tiers. The tiered pricing, where the more we trade, the cheaper it gets. The fixed pricing, where it charges a fixed fee no matter what. And the light tier, which is completely free. But before you go, of course I want light pricing because it's free. Hold up, it's only available for US residents. So for the rest of us, we can only choose between fixed pricing and tiered pricing. However, while we already know that if you are trading a small amount of shares, tiered pricing is cheaper, and if you are trading a large amount of shares, fixed pricing is cheaper, the question still remains, how cheap is cheaper? And at exactly what point is tiered pricing cheaper? That's why in this video, I'll be comparing tiered pricing and fixed pricing to find out what are the differences in fees for when you buy stocks and ETFs from the US, UK, and the Singapore market. So that after this, you will know exactly when you should choose one over the other. Then I will also show you how you can easily switch between the two plans in interactive brokers. With that being said, let's start with the US market first. First up, for the US market, the commission depends on how many shares you trade and not the value of the shares. So, for example, if you trade 10 shares on tiered pricing, IBKR will charge you $0.0035 multiplied by 10 shares. If you're on tiered pricing, the more you trade, the lower the commission gets. But we are only going to focus on the first tier, as most of us will definitely be trading less than 300,000 shares, unless you are some rich Saudi prince, of course. The reason why tiered pricing is better for a lower amount of shares is because it has a much lower minimum 35 cents per order, whereas for fixed pricing, the minimum is slightly higher at $1 per order. This means that if you are trading like 1 Apple share or 5 Google shares, you will only be charged 35 cents on tiered pricing versus the $1 on fixed pricing. Then, here's where it gets a little complex. For tiered pricing, there's also additional third-party fees, such as regulatory fees, exchange fees, clearing fees, and pass-through fees. Whereas for fixed pricing, you will only have to pay for regulatory fees. The exchange fees will vary depending on the exchange that you are trading on, but I won't go through that as it's actually quite confusing. Instead, I will just show you this chart that lets you easily understand the differences between the two pricing types. In case you are wondering, yes, this chart is free to download, and I've left the link in the description below. At the top, you can set the stock price, but for this example, I'll just set it as $100. It will then auto-calculate the fees, and we will end up with this beautiful chart on the right. The blue line is the tiered pricing, and the red line is the fixed pricing. As expected, tiered pricing starts out much cheaper at just 37 cents per trade. But the more shares you trade, the closer the line gets. Then at 150 shares, both pricing types have almost the same fees at $1.15. After that, fixed pricing becomes the cheaper option, while tiered pricing starts becoming more and more expensive. So there you have it. If you trade less than 150 shares, tiered pricing is cheaper. Anything more than that, fixed pricing is cheaper. This rule applies no matter what the stock price is, whether it's $10, $20, or even $1,000. The crossovers all happen at 150 shares. Next, let's move on to the UK market. The UK market is important for those who want to trade Ireland domiciled ETFs, such as CSPX and BWRA, because they have a much lower 15% dividend withholding tax as compared to US 30% dividend withholding tax. The one big difference here is that while the US market calculates its fees based on the number of shares traded, for the UK market, the fee depends on the total value traded. This means the more expensive the stock, the higher the fee. Both pricing structures start at 0.05% of trade value, but for tiered pricing, the more you trade, the cheaper the fee. Again, tiered pricing has a much lower minimum per order of $1.70 and a maximum of 39 euro dollars, while fixed pricing starts at 4 USD and has no maximum. Similarly, tiered pricing has third-party fees, while fixed pricing doesn't have any third-party fees. So, What does the chart look like? Here, I'm setting the stock price at $110, which is the current price for VWRA. You can see that when you just buy one share, tiered pricing starts out cheaper at $1.86 as compared to fixed pricings $4. Then the more shares you trade, the more expensive tiered pricing gets until it finally catches up to fixed pricing at 66 shares. After that, fixed pricing becomes the cheaper option while tiered pricing becomes more and more expensive. So in this case, the magic number to remember is 66 shares. But because the commission fee is based on the trade value, the chart may look a little different for other stocks. So how would the chart look like for CSBS, which costs $467? I entered this in and ta-da! You can see that this time the crossover happens a lot earlier at just 16 shares. Finally, let's move on to the Singapore market. For the Singapore market, the fee is also dependent on the total value traded. But what's interesting is that both pricing types start at 0.08% and the minimum commission per order also starts at $2.50. And only tiered pricing has a third-party fee, while fixed pricing doesn't have any third-party fee. So as you might imagine, because everything starts out the same, but tiered pricing has an additional third-party fee, fixed pricing will always be cheaper than tiered pricing. This is the same no matter what the stock price is. But here, I want to point out something important. IBKR is not the cheapest broker to trade Singapore stocks. Instead, it's either Mumu and Safe Trade, both of which start at 0.06% with a minimum of $1.98. So, in summary, if you are trading a small amount of US and UK stocks, tiered pricing is cheaper. Whereas if you are trading Singapore stocks, fixed pricing is cheaper no matter what. Now that you know which pricing type is the best for you, here's how to change to your pricing type. Open up the IBKR web portal. At the top, search for pricing. Then click on IBKR pricing plan. Then just choose the pricing plan that you want. For example, here I've chosen tiered pricing as I only trade a few shares every time. Click continue and you are done. If you submitted this request prior to 16:00 Eastern Time or 4 AM Singapore time, this change will only take place on the next business day. Anyway, that's all for this video. Hopefully, you found it useful. But with that being said, do join my Telegram group where you can ask or discuss anything related to personal finance and investing. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.